Let's talk about divorce. Statistics on divorce in America. My friends, divorce is one of the most terrible things. I just went through a separation, 2 years. I can imagine you, my friends, and the people who are watching who have been married for 5, 10, 15, 25 years who are getting divorced. 40% of marriages in America end in divorce. 48% of Black Americans today, Black, us, African Americans, end in divorce. 60% of those with less than a high school diploma end in divorce. Who are those people with less than a high school diploma? Minorities. A lot of our Hispanics, a lot of African Americans, even white people, the socioeconomically disadvantaged white, the poor white, they get divorced a lot. What are the top 3 reasons for divorce? Number 1, incompatibility, whatever that means. We're not compatible. Number 2, infidelity. Remember we just talked about being infidelity. Number 3, money. It just so happens the incompatibility portion actually encompasses both portions. Infidelity and money are the 2 reasons people get divorced. It's lucky I don't cheat. I don't cheat or hit women. It's lucky I don't cheat. And God has blessed me with money. So hopefully when I get married, hopefully I won't, I won't. That's my prayer. That's my prayer, that I won't ever divorce. But for those of you who are, or who are thinking about it, or who have gone through it, I've been a financial advisor for 17 years and I've represented many divorced couples. It's the most painful, emotional thing that I think most people ever experience. Again, I'm just separating from somebody who I've been with for over 2 years. I can imagine if you've been with your spouse for 20 years, you've got to be heartbroken. And so experts say that most people after a divorce they suffer a 30% drop in their standard of living. Imagine having 2 households. Before you had 1, now you have 2. You have to pay rent. You have to pay mortgage, rent. You have to pay food. The kids, you have to buy 2 separate beds. You have to furnish the place. You have to, separate. A lot of things happen. So your expenses, you're not making more money because you're divorced. Actually, you spend a lot of money on lawyers and things like that. When you finally get divorced, you have 2 separate expenses when you only had 1 before. 50% of families in America experience poverty following a divorce. Over 1 million children experience divorce per year over the past 27 years, and they've seen a drop in their standard of living. When we have our income go down in a country, it's called a recession. I've talked about that before. Gross domestic product, it goes down, it's called a recession. When children, 1 million of our children every year, when they experience drops in their income, it's just life. Because of divorce, it's just life. Our children are hurting. Our children are in pain. Our children are suffering because of divorce, because of the sins of, the mom and dad, or mom or dad, or both. And I say sin, generally, not a bad thing. Sometimes you just have to, it's just not compatible. The impact on men is huge, 10 to 40% drop in their standard of living. But the impact of divorce on women is monumental. It's monumental. Women get really, really hurt in divorce. And I'll tell you something. I have a client who got divorced, and her husband's a surgeon, and she was a teacher. She's a teacher. And they got divorced, and she got, they separated the assets. She got, like $1 million, 8 years ago. They had money, and it seemed like the money would be enough. It would be a lot. And then she started drawing down because she had to maintain her standard of living. This was 7, 8 years ago. She couldn't survive on a teacher's salary because of her current standard of living, previous standard of living. So she started drawing down that $1 million, drawing down every year to pay off the house, the expensive house that she was living in, that she got from the divorce, to maintain the car, the expensive school that she paid for. They had, I think they had 3 kids. He paid for 2, she paid for 1, but that was still, 30, 35,000. The expenses were just, monumental. Somebody in her family was sick and she had to pay that bill because she was used to paying it before. And before she knew it, I'm begging her every month to stop taking money out above and beyond because that's her retirement assets. Now she's almost 60 years old and she's almost eating those retirement assets away. And she's almost, she's almost retired. And I'm heartbroken because I don't know what to do because she didn't take advice. Some clients don't take advice. 1 in 5 women fall into poverty because of divorce. 20%. Think about that. 20% of our females fall into poverty because of divorce. 75% of all women who apply for welfare do so after a disrupted marriage or relationship. 75% of women, our women, go to welfare to get welfare checks because of a divorce. 1 in 4 women lose their health insurance for a while because of a divorce, 25%. 3 in 4 divorced mothers with child support orders don't receive their full payment. Let me repeat, 3 in 4 divorced mothers with child support orders don't receive their full payment, which means the men aren't paying the bills. These women are suffering in pain on food stamps or God forbid, whatever. And the kid is hurting because there's no money because the man doesn't step up and we can't find him and he's not around. And these women, our women are suffering. And that's what I want to try to help you to do today. I want to help you to watch out for, look. This is for men and women, by the way, but I think it affects women a lot more. And so I want to address that. There's certain things that you should be looking out for before divorce. Before you get married. Nobody gets married thinking they're going to get divorced. God willing, God forbid, your next marriage will be your last marriage. And the marriage you're in, you will not divorce. It's a terrible thing. I've seen it firsthand. I'm going through my own little one now. Just a separation after 2 years. We weren't even married. But imagine married for 15, 20, 25 years. Please don't get divorced. But if you understand, almost half of us do get divorced. And so if and ever it does happen, you want to be prepared. A few things you want to do before you get married. Number one, please talk about, please talk about money with your soon-to-be spouse. Talk about everything. Don't talk about money. Talk about the wedding. Don't borrow money. Don't borrow money to have a wedding. Please don't go into debt to have a wedding. A wedding is I'm sorry to say, it's a liability. It is an amazing thing, but it goes away. That money deserves to be in your 401k or in your kids' college fund. So please, if you can't afford a big wedding, don't spend money on a big wedding. Talk about your credit scores. If your spouse has bad credit score and you have good credit score, that could affect you. And so you want to try to balance that. You want to try to help them bring it up. You want to maybe apply for that home on your credit, but they're going to ask for hers too. So that might hurt you a little bit. And maybe before you get married, you want to, I'm not saying you should get married based upon credit. Well, maybe you should, but don't take much. Do whatever you want. If you want to get married with somebody who has bad credit, you can, but I'd advise you to maybe try to clean it up. And even if you do, then you may want to use your credit first. Talk about debt, right? Disclose each other's debt. Talk about the debt that you have. And we'll talk about that in a second. What kind of debt, after divorce you keep, what kind of debt is communal that you both split, and what kind of debt you bring in, you keep with you after a divorce. But please talk about your debt. Don't hide your debt. I had a situation, and I talked about this before, where a client almost got divorced after about 18 years with his wife when he was paying the taxes. 18 years into their marriage, he was paying taxes, and they were getting garnished. He was getting a tax refund. His tax refunds, big tax refunds, were getting garnished by the student loans that she got 18 years ago that he thought she'd paid off, and she hadn't. And so he got so irate and so mad and so angry. So please disclose your debt to your partner. We don't want that. Money is a big deal. Money causes divorces. Talk about your income. Talk about how much you make, and talk about how much you're going to want to spend. It's very, very important to plan your expenses today. Your gas, your light, your electricity, but also your expenses for the future. What happens when you buy a car today, and remember, in 3 or 5 or 9, or if you're like me, 15 years, I drive cars for 15 years. I'm not a fancy guy. I'm a simple guy. I'm a real simple guy. I don't, I like simple things. I may drive a fancy car only because I like it and I can afford it. But I also have another car that's 15 years old and it's in the garage, and I love that car as much as the fancy one. So it's very, very important for you to consider that that car that you buy, you're going to have to buy another one in 5 years, 10 years, 15 years, or whatever. Where's the money going to come from? So you have to plan for future expenses also. You have to build up I wouldn't call it a rainy day fund. You have to build up different pockets of money. This one is to buy for your vacation. This one is for your car in 5 or 7 years. This one is for your house. You need to plan with your spouse about your budget. You need to talk about the kids. Where do you want your kid to go to school? You're thinking, oh, maybe a public school because we live in a nice area. I mean, it's almost, a couple of $1,000. And your wife is thinking, oh, or your husband is thinking, look, that private school over there that costs $28,000 or $30,000, I like that for the kid. You got to talk about those things. And maybe where you move could be because, where you move to could be because you can get a really a great public school. So you don't have to pay the cost of a private school. Let's see. Prenuptial agreements. That's a tricky one. Now, I know you're looking at me and thinking, the women are looking at me and thinking, especially the ones who are not married, sitting next to their fiancés, you're not about to talk about prenups here, are you? The men are looking and saying, we want prenup. Well, let me tell you, I always recommend a prenup only under certain circumstances. Look, people are, in certain states there's community property, and so in many, many cases, and you guys rise together, so it wouldn't make a huge difference. But I always recommend a prenup under certain circumstances, right? One of those is when you come into the marriage with unequal distribution of wealth, right? Which means one of you is very wealthy, one of you is very, doesn't have a lot. And I've had examples of where a 75-year-old multimillionaire meets, a waitress, and he marries her. Who the waitress is 28 years old, and he has grown kids who are older than her. And so in that case, I would recommend you get a prenup. The second situation is when you have kids from a prior marriage. If you have kids and from a prior marriage and you get married again and you don't have a prenup, well, I'm sad to say, sometimes if you die, your kids could get disinherited. You want to make sure, or if there's a divorce, you want to make sure there's stuff for the kids, no matter what, that isn't part of community property. Inheritance, heirlooms. Some people have wedding gowns that they've passed through their family. Some people have rings and all of the jewelry that's passed through their family. You want to sometimes make sure that you have a prenup that separates that in what you call separate property. Okay, those are things you look for before you get, not divorced, before you get married. We're not expecting a divorce. Those are things when you think of all these things, you're thinking about them before you get divorced. Before you get married, I'm sorry. You can tell I'm a little distracted sometimes, but I'm still, I'm giving you 110%. It's been a traumatic, very challenging, time for me, this last few days. And thank you for your prayers, by the way. So there's, before you get married, I just told you the things that you should do. Please do them. What if, God forbid, the divorce is happening? You can't stop it. You're in the middle. Things aren't working out. What do you do? And it first helps to understand, to know the rules in your state, the laws in your state, right? There's two different broad categories of law that govern divorce in America. I think it's 9 states. 9 states have this thing called community property. There's California, Arizona, I think it's Louisiana, Texas, Idaho, Nevada, New Mexico, Wisconsin, and Washington. I think it's 9, right? Yeah, 9 states have community property. The others don't. They have this thing called equitable distribution. What does community property mean? It means whatever you create together or separate, once you're married, in your marriage, is divided 50-50. It's equal, right? And so if you're in California and you get married and you become rich and he's not maybe as rich, and you have to separate, you might have to give them 50% without a prenup. On the other hand, um, equitable distribution, which governs the rest of the states, the most of the states, is where assets are divided fairly, but not necessarily equally. And the judge will look at certain considerations during that, those, 50, in those 40, 41 states. One of them is, one of those considerations is length of the marriage. How long have you been married? The longer, then maybe the more equal. Each spouse's income. If one makes a lot and one makes a little, well, maybe you want to even a little bit, maybe not give all the assets, maybe you want to even that a little bit, to give her, something more. They look at each partner's contribution to the assets. If you brought all this in and he brought only this, the judge might not give you 50-50. He might give, something like that. And then it looks at wastage. If you have a partner who likes to shop, who likes Louis Vuitton and who likes Gucci, and he or she, whatever, is buying all this stuff and, wasting, it's okay to buy a couple of those things, but to continuously buy those things, if you have a partner who spends all the marital assets and you're getting divorced, you can say, hey, look, she got all that Gucci. I don't have anything. I got, H&M. I like H&M, by the way. I wear H&M pajamas. They're pretty cool. Anyway, and H&M isn't paying me anything, by the way. This is all, I do this for charity. I don't collect any money from YouTube. I do this for love, and I do this for charity, and I do this for you. I do it for, well, not charity. I do it to help you. That's my mission. It was very difficult for me to come over here today with all that's going on, but I felt I owed you a duty and a responsibility to explain to you first, and I'm not going to do it again. I did it one time about what was going on, and also to continue educating you. I've been hearing from so many of you that, David, we miss you. We miss your lessons. We miss you. And, as a guy who loves, unconditionally, as the way, I love, you who have supported me so much, I had to come back. So I'm back now. I'm going to be back and I'm staying. I'm going to help you. So you now understand community property. If you're in a community property state and you don't have a prenup, okay, you're probably going to get 50%, all things being equal. If you're not, if you're in an equitable distribution state, then you may not get 50%. You gotta tussle it out. Tussle it out. No physical. I'm talking about physical. No physical. Tussle means paper, right? We don't do physical here. We talked about that. Anyway, get a great accountant. Accountants are good at helping you figure out the books. So sometimes you have a spouse, who might be, hiding some assets, or, who might be playing games, who might think they're smarter. And if they are, well, get a good accountant who can help you dig through. It's called forensic accountants. If you think so, only if you suspect them, but the guy may not have any assets. And if you suspect, then get a good accountant who can help you dig through the books. As a matter of fact, let me tell you something. In California, there's a law that if you hide assets in a divorce and the courts find it, you're liable to lose 100% of that asset. No 50-50, so don't hide anything. Just be clean. Sometimes I always look at it and think, and this is my own personal thing, give unto God what is God's, give unto others what is others. If she's been with you for that long, it's hers. If he's been with you for that long, give him what is due. Give her what he is due. You'll make it back again. By God's grace, you'll make it back again. I've always believed in the doctrine of fairness. Just equal distribution of assets. I mean, according to me, it works. But I know some of my clients are mad at me now because they're very rich, and if they get divorced, they don't want to split their assets. But that's my own personal belief. I still work, if I work for you, I'll fight really hard for you in whichever capacity you want me to. Okay, taxes. It's very, very important to understand the impact of taxes when you get divorced on your assets. For example, I saw a situation where a man was separating from his wife, and they had, I don't know, X amount of dollars, and he gave her $250,000 in the 401k, his 401k, and he kept $250,000 in the checking account. She was cool with it because she thought it was equitable distribution. Well, it's not, because the taxes he has to pay on that $250,000 that's in the money market account is zero. Well, maybe about $25 from the interest you get. What's the interest you get now? 0.002%. You know, maybe they give you on that $250,000, maybe get $62 in interest or something, and maybe that you pay taxes on $20, so maybe $20. How much taxes does she have to pay? Retirement assets are ordinary income. You could pay, you add state taxes and federal taxes in states where there's the state taxes, you could pay as much as 45 or 50%. If you take it out early, which that my other client was doing, if you take it out early, you'll pay another 10% penalty. You could lose 60%, which means she was literally getting 40%. She was getting 40% of $250,000 while he was getting 100%. How fair is that? So please be aware of taxes. I'll give you another situation. Alimony versus child support. Child support has historically not been tax deductible. Alimony, you know, has historically been. So sometimes when you negotiate the equity, you know, if you're the one who's paying, it's cool because you get to deduct it. If you're the one who's receiving, you got to put it on your taxes. So you can negotiate that too, which means, okay, how about you pay me, but you don't take a tax deduction. That way, I don't have to report it for tax purposes. Or instead of giving me this much child support, give me this much child support, and then increase my alimony from here to here. That way, I can, you know, get a tax deduction for what I pay you. And because your income might be less, you pay less taxes, and so on and so forth. Just little strategies that we financial advisors use to help you get through things. Debt. Let me tell you something. I don't like debt a lot, except certain types of debt, which are good, like real estate debt, you know, and certain types of debt, not student loan debt. That's why Sushi's here. It's going to rescue you from student loans. But we're going to talk about that some other time. But most types of debt that are incurred inside of a marriage are carried on and divided equally after a divorce. So if she's buying Gucci shoes and you're buying Louis Vuitton suitcases and Bose systems and all that multiple times and all these fancy cars, and you're incurring debt, when you divorce, you're going to split that thing equally. She's going to take half, you're going to take however that works. You're responsible for her debt, she's responsible for yours. Except student debt, or things like a mortgage. So if you take the house, you get the mortgage on it, right? And so with student debt, if you come into the marriage with $65,000 in student debt, and you leave the marriage with $60,000 in student debt, that's not divided equally with him. You get to keep, or her, you get to keep that debt. So be aware of that. If God willing, you never will go through a divorce, but if you have to. What if you're already divorced and you're in a stage of your life where, oh boy, the judge finally signed off on it and it's done. We got to move on. There are a few things you can do, right? You're at a place now where you need to start rebuilding. The first thing you want to do, and I talked about this before, excuse me, change your beneficiary designation form. Change it right away, right? That's your 401k, that's your life insurance policy, that's your IRA, that's the title on your home. Change all your beneficiary designation forms, right? I told you about a situation where a man who I knew was married, divorced, and then remarried, and was with his new wife for 15 years, had 2 kids with her, and he died. And he forgot to change the beneficiary of a $2 million life insurance policy. He forgot to, I think it was $2 million. It was between 1 and 2 million. I don't remember, it's a long time. He forgot to change the beneficiary on a $2 million policy. He changed his will, but he didn't change the beneficiary designation. Guess what? His ex-wife, from 15 years ago, got the insurance policy. His existing wife, she went to court, and the judge said the beneficiary designation form, the beneficiary designation form on your life insurance policy, your IRA, your 401k overrides, is superior to the one within your will. So she got all that money. Don't let that happen to you. Change all your beneficiary designation form. Retitle your assets. Some of you have real estate, change the title to your name or to the name of you and your new spouse or your child, wherever, but change your name, change the name. Create a new budget. It's very, very important. I talked about budgeting for now and budgeting for later. Create a new budget. It's very, very important to plan for things that are to come. You've lost a lot. If you've gone through divorce, you've lost a lot of financial assets, whether it's the lawyers, whether it's the forensic accountants, whether it's arbitration, whether it's splitting of marital assets, whether it's whatever, whether it's like you're so depressed and upset that you can't work as hard, decline in income, therapy sometimes for you, for the kids. There's a lot of expenses in divorce. So you have to now budget, especially if you're later in life, you have to now create a budget. And that budget has to take everything into consideration. It has to take your expenses, your college expenses for the kids, your emergency funds, everything. So please create a new budget. Many people, I've seen situations where people had two homes. A couple had a vacation home and a second home, or rental home and a main residence, and they split. You take this and I take this, and often, sometimes, the breadwinner moves into one home, and the one who's not the breadwinner, who's often the female, moves to the second one, which often is too expensive for her in many cases to maintain her income. Some people are stay-at-home moms, and they can't afford to keep the mortgage or the maintenance on that property. Consider selling that property and moving to a place and moving to another one that's smaller. I mean, there's less of you now anyway, that's smaller or that's more affordable, so you can maintain that expense. You can reduce your expense and take that money and invest it in something that, 401k, and things like that. Cancel your joint accounts. Many people have joint accounts, open up new accounts. You just want to clean things up. It's important to hire a financial team. Hire someone, hire many people have their ex, often the male who handles the finances and the taxes and the budgeting and the financial planning and the bank accounts and things like that. Well, you could, but often it's better for you to get your own team, who have your back, and they can help you. They can really help you. So there's a lot of things that you can do to protect yourself from divorce going in to a marriage. There's things you can do when divorce is inevitable during a divorce, and there's things you can also do after the divorce. It's kind of like, okay, it's going to happen. Things you can do after it's already happened. I've talked a lot. I'm actually I'm not used to using my voice this much because I haven't spoken to you guys in a few months, but it feels really good to be back. It feels really good to be back. Thank you so much. I love you very much. Thank you for listening.